You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for a little program we like to call around these parts. Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com. As well as, of course, from the ever-exciting Options Insider Radio Network. If we sound a little different for one more week, we are still down here in the southern studio. How can you tell that? Well, A, I sound different. B, you could probably hear the rolling of thunder in the background. The gods of Florida they're not smiling upon the network here. It's literally the second I turn on the microphones every time over the last few weeks here, we've heard nothing but thunder. And the sky is open up. So apparently they are not smiling upon the network. But hopefully you guys are out there as you're joining us. You guys can always, as usual, the live stuff still running. So as we hear Mr. Rocklob, or should I say Mr. Meatball sigh there in the background.
Yep.
Things are rocking along, I see there. We'll get to that in a second. But of course, listeners, you guys can join us as usual every Friday at noon Central, 1 p.m. Eastern via Mixlr, MIXLR. Of course, you can always get the podcast as well via the old website or via iTunes or all the other good fun places that you can get that stuff. Make sure if you listen, hit us up, questions, comments, insights. We do like to hear from you guys. And joining me as he's busy sighing, I believe in his office there in sunny and scenic Chicago, certainly sunnier than it is right here right now, ironically. Mr. I almost called you Rock Lobster, whose birthday it is, by the way, today. Let me say a happy birthday to the Rock Lobster. Andrew. And Mr. Meatball, how are you and what's going on in the land of all things meatball?
Well, I just got back from beautiful Bloomingdale, Michigan, and I am in one of the 10 towns that changed America and enjoying this hot weather.
Enjoying hot weather. I'm looking here and it's
loving it.
Looks like we're having some issues with the live again, so let me just see if I could sort that out for us here. Well, why don't you and I keep on rolling right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is indeed the portion of the program where we break down what the heck is going on from a vol perspective out here if you're trying to listen live. We're trying to get you on here live here, listeners, so give me a couple of seconds over there to fix that. Mr. Meatball, or Mr. Rocklobster, I should say, or Meatball, while I'm working on this, why don't you tell us, sir, what it is caught your eye in this week's weird activity? Now we've lost the Meatball. What is going on here, sir? Crazy. The Skype gods are not smiling upon us today. Listeners, let me see if I get this. Should hopefully get the live stream back for you here. Listeners, 1 second. There we go. Submit. All right, we should be live there. Mr. Meatball, do we have you again, sir?
I'm back.
All right, there we go. What caught your eye in this week's activity, sir, while I suss out this live stream?
Well, they did everything they could to explode vol, and then they've taken it off into the end of the week. Kind of an interesting interesting couple of days. They really looked like they were going to panic, and then they pulled everything back all at once, middle of the day yesterday. Not sure what caused the big turnaround. You know, that's a beautiful thing, and you know, that is the issue. I mean, it was just a nice run up followed by run down, and vol getting really juicily bid. And then what was interesting is you could see the top in vol. It was pretty fascinating. You know, I was watching trading yesterday, and you know, about half an hour into the open, all of a sudden, at the money options start getting bid, and out of the money calls start getting super, super, super offered. Now, those of you that have traded the volatility products, such as myself and Mark Longo, they'll tell you that is a telling thing. When the money stops wanting that out of the money stuff, and they start wanting that at the money stuff, it means that they're potentially buying at the money puts, or maybe calls delta neutral. And what they are definitely doing, the one thing we definitely know they're doing, is selling all the out of the money junk they've accumulated. And that is what happened yesterday. Pretty phenomenal. Right around, call it 10 or 11 in the morning Central Time, and then all of a sudden, whoop, we're higher. And that was the way the day went.
Now, you've had the good fortune, or perhaps bad fortune, who knows, interesting timing, shall we say, to have launched a vol fund not too far before all this tumult really hit. Walk us through what's it been like for you over the past week or so with all this vol tumult coming back into the marketplace. What have you been doing?
It's been great. You know, the key is in a fast vol market like this is to not get married to a position. Don't get married to being short vol or long vol, and trade it. You know, on Tuesday, as the market was starting to explode and it became very clear that people were worried, you know, all I did was buy an out-of-the-money call spread that was just out of the money and flip it for $1 profit 2 hours later. Those are, you know, if you're not married, then day trading becomes very, very fun in these environments. The other thing you're doing is systematically taking off winners and looking at your losers to make sure that they fit within your kind of risk tolerance, and whether, you know, if things go back to where they came, have you sold enough long vol? If things explode, have you kept enough long vol? That's really the key to these type of events, right? If you trade everything hedged, you have to be willing to take some money off when it works in your favor, and you know, that's kind of what we were dealing with over the last few days and weeks.
We'll get into more of the mechanics of it, perhaps in a little bit of what was going up and what was trading. It was an interesting week, like we mentioned. VIX Cash here getting bid up quite a bit earlier this week, getting to a high of just about 19, I think. You hear that crazy thunder going on here, listeners. 1961, actually, I believe, out there. Whoa, Mr. Meatball, you okay there?
Oh, yeah, no, my son has a fart machine, and I accidentally touched it.
Do me a favor, go ahead and mute while you're playing with the...
I am.
With the crazy toys. There we go. Oh, that's so much better. Not that I mind the occasional fart machine here, but by the way, listeners, speaking of noises, you guys should be able to hear us on the live stream now. It does seem like the Southern studio likes to rebel with the live stream, but everything does appear to be working now. So if you're having problems, check back in. You should be able to get in. Like I said, VIX Cash hitting a high right around 1961. Back good year. Good high for vol this week as well, right on Monday. That was kind of our peak for the week. We did threaten it a few times, a high just actually yesterday, just a tick, literally a tick under 19 yesterday before coming off, and now, of course, most of the vol coming back in. We're at around 1530 in the VIX Cash here right now, off about a handle and a half. We saw as high as about 1623 today, so a lot of that coming off as most of the major indices back in the green, back in rally ho mode. So apparently the trade concerns, the will they, won't they over the trade war, all the other issues that were kicked off earlier this week with a few aberrant tweets seem to have rescinded, at least for the time being. S&P up about 0.75 of a percentage point. The tech low these days, Dow up nearly a full percentage point, and the tech-heavy NASDAQ up a little bit shy of half a percentage point. So interesting stuff out there. Also worth noting, VVIX has been rocking and rolling of late, as you would expect, because it has been a topsy-turvy week for all things volatility. It topped out, let's see, how to 126. Yes, 126 was the top for VVIX back on Monday. If you've been listening to this program for any length of time, you know we like to look at VVIX as a gauge of when things are interesting, when things are topsy-turvy. You know it typically in this time frame has bottoms out around 75 and can hover around 95 to 100. North of 100 starts getting a little bit elevated. When it gets well north of 100, like let's say 126.07, like it got on Monday, then you know things are really rocking and rolling. Something you should certainly be paying attention to as the week has progressed. We've seen VVIX come back in. It's right around 104 right now, so 20-odd handles off of that high on Monday, but still very impressive levels. In fact, I know your buddy there, Bill Valentine, Mark, tweeted out something interesting, which kind of caught my eye. He said at the time he tweeted this, the VVIX is 114. He said that level of VVIX puts it in the 5th percentile. It closed at 114 and higher on 138 other occasions in the last 10 years. 97% of those times, so 134 out of 138, VVIX was lower a month later, and never more than 3% was it higher. Bodes well for option selling strategies, at least according to him on there. I want to get him on to talk about this. Maybe we'll get him on next week to discuss that. But yes, VVIX, when it hits these lofty levels, it's very rare, as the data shows, that it can maintain that. And so we'll see. Certainly, we've already seen it come off quite a bit. We'll see if that continues as the week unfolds out there. VIX futures land has already also been an interesting one to watch, as once again they are coming for the vol. We're seeing the cash right around, say, 1538, and we're seeing that future a little bit higher, about 1560 out there in the front contract there or so. It's about a 30.3 handle difference out there. Mr. Meatball, anything catching your eye in terms of VIX futures, term structure, all that topsy-turvy backward juice before we move on to the options and the other fun stuff, sir? It's like the Skype gods are once again conspiring against us, listeners. Let's get back to Meatball so he can join us here for all the fun. I think when he was trying to mute himself, he actually hung up on himself, which he tends to do sometimes. So we'll see if we can get all of that sorted out. Yeah, it's been a quality audio quality show here from the Southern Studio. I think these tumultuous thunderstorms, listeners, certainly having something to do with all of that fun. Let's see if we can get him back there, listeners. Meanwhile, we keep on rolling. Worthy of note this week as well. Are you back there, Mr. Meatball?
Hey, I'm back.
There he is. He lives. I think when you went to mute yourself, you hung up on yourself. I was just in the middle of talking.
Yeah, and then it wouldn't reconnect. So it was gorgeous.
Yes, that's who knows.
The Skype gods are not happy.
Skype gods are angry particularly with you today for some reason. So it's definitely you.
Yes, I don't know.
But that said, we were just talking about the VIX futures, a little bit of backward juice creeping in this week.
Yeah, it was really crazy.
Anything particularly catching your eye this week?
Yeah, your boys Thompsons got long for a little bit, which was kind of interesting. Was just a fascinating day. Couple of days to trade vol. It was a really fun, and unless you were just caught really, really short, which is why hedge trading is so interesting. The other thing that you'll like, our July 70-90 call, maybe I'm too early, but the July 70-90 call guy closed up shop, said, I'm done. So,
yes. I was going to get to that in a little. We'll get to that in VXX. We have a lot to hit on in VXX, but you're right.
Yes.
OI is coming in. I guess he saw discretion the better part of valor. Before we move off the VIX futures really quick, were they rocking, what is it, the Tulum, where they're long farther out the term and then they short
it just turned into a full-on Tulum. Yeah, long front, short back, playing the roll forward. It was we got a pretty decent backwardation. Even the kind of static 30-day got over a static 60-day future briefly. So there has been a lot to watch from the vol landscape, and we raced up. It was pretty fascinating for such a small move how quickly they ran premium on.
Speaking of the vol landscape and managing funds in this environment, the Pinnacle Awards were just last week. Just worth noting of those out there. They usually award things to CTAs and managed futures traders, but they also have an options category. Just worthy of note that last year's winner blew out in February, as you recall, Mark. So
that's right.
Something to be aware of if you're looking
Way to
at
go, guys.
The rankings and the winners is that maybe risk management. I think the folks at maybe Barclays have a hand in analyzing that. Maybe risk management should kick in for some of that stuff going forward. Speaking of kicking in, let's see how VIX options actually kicked in here this week as we're coming up about 15 minutes into the show. Fairly light day on VIX options front. ADV right now hovering right around 500,000, 510 or so, and $1.50 on the tape so far today. So a pretty light day. It was a fairly light week except for Monday. 540 hitting the tape yesterday, 393 on Wednesday, 425,000 contracts hitting the tape on Tuesday, 1.2 million rocking the MCAD tag on Monday out there in VIX land, so a little bit of action out there. Overall call to put about 2.7 to 1, so slightly shy of where we were this time a week ago. It was hovering right around 3. Let's break down some of the big hot VIX action out there. The top 10 hot VIX strikes, if you will. Number one with a bullet out there. The July 25s, 203,000 contracts, followed number 2 by the July 20s. Got a nice little juicy July call strip going here. July 20s, 195,000 for number 2. Number 3, the July 30s, the 30s. That 30 strike continues to capture the imagination in July and in August. 183,000 of the Julys taking number 3. Number 4, the AUG 30s with 165,000. Then we go down to the AUG 28s, 160,000. Number 6, the July 29s, 146,000. Then we got a nice little put strip going here. The number 7, July 12 puts, $1.46. Number 8, the July 14 puts with $1.45, and number 9, the July 11 puts for the 143,000. Rounding out our top 10, the July 28 calls, 143,000 of those bad boys as well. Total of about 6.8 million contracts open, about 5 million on the calls, about 1.8 million on the old puts. Mr. Meatball, anything out there in VIX options land really lighting it up, catching your eye this week, sir?
I didn't see any crazy trades this week, to be honest. Nothing completely out of whack. We saw some call chasing on some of those big vol days, but even those days weren't that busy, which is kind of different and maybe a sign that, maybe it was just a little one-off spike. They weren't that crazy on the days that we were exploding higher. That's different from the past.
All right, now we can move on to your favorite, everyone's favorite out there, VXX these days. I've seen a lot of people out there talking and tweeting and analyzing VXX, people saying VXX is the one chart everyone should be paying attention to right now. And there certainly is some of that. Certainly is some of that out there, sir. People love themselves in VXX. This time last week, it was about 33 or so listeners. We hit pushing 40 out there in VXX land earlier this week. Now we're at around the 35 level, so actually 36 and a quarter.
36. Yeah, 36.
So about 3 handles higher than where we were this time last week. And I'm looking here at the numbers. Our OI for VXX, sir, this is from last night, so I probably should update it. Why don't you regale us, sir, with what caught your ey out there in VXX options land while I pull up a new top 10.
Yeah, so we all know there's been this big July 70-90 call spread buyer. He shut down everything and then put on a small hedge in August, only about 13,000, buying the 55-74 call spread. So my guess is that he or she is licking some wounds and not feeling good about that trade, and thus made the decision to, maybe just do a little bit less aggressive, not nearly as bananas for that trade as they were in some of the previous weeks.
Yeah, what they put it on for again? I forgot, like 23 cents, 25
32.
Cents? 32
I think their
cents.
net price was about, between 32 and some other ones. They sold out of it at 16, so they lost half their cash, and then they bought the AUG 55 74, but they only did 13,000 of those. So I think they're keeping the hedge, but who knows? Maybe some of their position came off too. But looks like it was just someone who met the the why you don't hedge with VXX gods.
Yeah, I guess some of our listeners who went out and ended up taking the other side of that, hopefully they did all right. Maybe they're taking theirs off now too. They got a little bit of time to run here. I'm looking at the OI numbers. Yeah, this kind of just went up. I think today, so we don't have the actual. You okay there, Mr. Meatball?
Yeah, I'm fine. Just getting a little ice.
There you go. Do me a favor. You got a mute button there, sir?
Not one that works right now.
Apparently.
The Skype gods have said, sorry, pal.
Skype gods are not loving us at all.
No, they are all about not viewing volatility.
But you know what? Looking here, I'm just pulling up the, if I can get my system to play along with me, I can get the actual, because the OI still hasn't reflected that new trade out there. Let's get the top trades out here. We can break it up for ourselves exactly how we like to do it, and it's not here either. So you know what? Let's just keep on rolling. But
here, let me see what I'll look and let me see what I can find. So the top here, I'll just give everyone the top. Believe it or not, Mark. All right, here's a quiz. What is the number one open interest option for VXX?
Got to go for our bad boys, the Jan 2019 10 puts. I saw someone picked up another 100 of them today for 2 cents.
Oh, yeah, no, they traded. They've been trading left and right.
They have a bid today. Right. There was no bid earlier. There were no bid.
I know.
And now they got some life again. Let's see, where are they right now as we're talking? Our old friends. Yeah, they're no bid at 2. But I'm sure that penny bid will materialize again for more.
In fact, I'm going to put a penny bid in right now.
I was going to say, how many of those are you rocking right now?
I just dropped in a penny bid for 2,500.
There we go. I just got to keep that bid alive.
Well, you know what? Buying for a penny, it's not like I'm expecting these to go in the money, but if I buy them for a penny and they end up being worth a dime, on 2,500, that's not that's 25 grand in your pocket. That's a great return.
Yeah, exactly. That's
and on top, and with VXX, it's the one vol product I can kind of play the payment game, and potentially get you pay a penny, and then you pay your small commission. But if you collect on that, you can end up not wearing it. There
you go. Freebie puts in VXX. I'm looking here. Someone also trading up some SEP 50s today in VXX land. 2,500 of those going up for 264. Someone pretty much lifting the offer on those bad boy. I know we talked July 70-90. How's SEP 50 feel to you, Mr. Uncle?
I don't mind the SEP 50, but yeah, you can definitely see that there's some of the August in there that has been bought. Look at the August 55s, 18,000 of those, 27 of the 56s. So there's some August hedging that they put on, and then we have, as you stated, we got those SEP 50s, which are trading some size. That's a nice 2,600 lot in those SEP 50s. I don't know why you'd want to own them, but hey.
There you go, listeners. For all our VXX upside sellers out there, we just found perhaps a new one for you to keep an eye on at the very least.
Woot.
Yes. Since we're talking VIX ETPs, I got to bring this up. A lot of listeners hit us up about this one, Mark. I'm sure you maybe saw this. Bloomberg running with this article this week on the hedge fund that made 6,000% on VIX jump. They're betting on the next VIX blow up. And so a lot of people hit us up about this. I took a look at it. I'm not familiar with the authors of this one, which maybe speaks to why they would write about this. But Bloomberg put out an article about this. What's their name? I don't know. Houndstooth Capital Man. They have $7.5 million under management, so not exactly a big fund. And they made, I guess, a decent trade last February on the SVXY puts, which was well timed. And so now Bloomberg running with that and writing up this whole write-up about how they're picking up puts on the other side of that coin, kind of the UVXY. Then you read the article a little bit, and they say it's a $70,000 trade. So it's like a 100 lot.
Yeah.
So they got more PR out of this trade than the trade was worth. Because they got a full profile in Bloomberg for this kind of ridiculous nonsense. So we won't say that.
Yeah, and listen, it's good job, guys. But I'm gonna save my Houndstooth thing for Houndstooth Saloon in beautiful Wrigleyville. I'm trying
to. I mean, I obviously work a lot with these media. I know how this stuff works. Obviously, they put this trade on, then probably immediately called Bloomberg to tell them about it, and then Bloomberg.
Yes, that's exactly what happened.
And then Bloomberg, to their shame, ran with an article about this. The $70,000 trade is front and center on Bloomberg. So I've talked to those guys before about what they should be covering in VIX land, and maybe
they're in Austin.
Maybe I need to talk to them again because I don't know if this one merits that cover. But firm aside, size aside, UVXY is not
excellent work, guys.
UVXY, not one we've really talked about a lot ever since the great, shall we call it the great restructuring of 2018 when SVXY and UVXY kind of lost their teeth. Do you still utilize it much at all? I mean, it's kind of a bit of a shadow of its former self.
Well, it's not as fun. It's not as fun to trade because it used to be super wild. Now, it's kind of like your imagine UVXY used to be your rock star that was like coked up and drunk and dropping E and acid all at once all the time. Now it's just like your kind of washed up rock star that maybe has it in a party every now and again, but has kind of lost it, and it's not nearly as fun to trade as it used to be. Yeah,
but you can still put a $70,000 put buy out there.
You can
and get covered in Bloomberg. Slow week clearly over there.
Yeah, there's
Bloomberg land.
Yeah.
But actually, worth noting as well. UVXY at the same time, people are writing up about this sizable put trade out here. I had a big outflows out there this week as well. On a percentage basis, the ETF with the biggest outflows this week was UVXY. Lost over 11 million of its units, a 27% decline. Given what we saw,
that makes a lot of sense.
Yeah, given what we saw out here in the vol space.
When UVXY explodes like it did, makes a $2-3 move, you can generally count on it getting outflows. I mean, it's almost. You can set your watch to it. It's that easy.
By the way, listeners, we throw these acronyms around. We assume you know what they all are, but if you're not familiar with UVXY, it is indeed the ProShares Ultra VIX Short-Term Futures ETF. Say that 5 times fast. It's a 1.5 times levered product for the S&P VIX Short-Term Futures Index. What was the leverage before the was it 3x?
It was 2x. Now 2x. It's just 1.5x.
Yeah, now it's 1.5, which is a weird. Why make it 1? Why go to 1.5? It's just a weird.
Exactly.
It's a weird number. The whole thing is weird. People writing about these trades. All you guys hitting us up about this trade. We don't really do a lot of UVXY anymore because it's not really as exciting as it once was. Same thing for SVXY. None of those really are lighting it up. I did look here at the top positions in UVXY. Guess what? If you had to guess right now, Mr. Meatball, UVXY. I'll pull it up for you so you can see exactly where it is right now. It is right around, I think it was around a 12. Yeah, about a 12. And so 12 right now. What do you think is the number one options position in UVXY, sir?
The 10 puts.
Interesting. In what month?
September.
Well, if you said Jan 10 puts, you'd be at number 5.
That's what I meant.
If you said Jan 1 put, you would be correct.
Oh, wow.
23,000. Not a lot open anymore in this thing, listeners. It has a total of 862,000 contracts open. The Jan 30 calls, number 2. Then the Jan 15 puts, all Jans. Then the Jan 75s, 12,000 of those open. Ugh. And then the Jan 10, probably some legacy positions there. Jan 10 puts. Looking here, the June 11 puts, spiking on the 29th. Did grow a bit in OI this week, so maybe that's where our friends made their sizable $70,000 downside put bet out here in UVXY. Either way, that one caught my eye in a weird way over there. That's all it takes. 70 grand to get fixated on these things. Also worth noting out here, well, before we move on from VIX ETPs, Mark, anything else catching your eye? Any of the other VIX ETPs out there? Or maybe you like a little a TY VIX or anything else going on out there? RVX, our old friend?
RVX has been, believe it or not, IWM and the RUD have been the canary in the coal mine. I would point out that, VXN had been really depressed relative to VIX and RVX, and that has changed. There's a nice 5-point spread between the S&P VIX and the NASDAQ VIX, and that tells you where, as much as we talk about the financials, where the real pressure is, and it's in tech.
Yes, we have seen that. And, the nice thing about some of the Russell names, too, is that at least with all these macro trends knocking things around. We don't see that as much in the Russell because it's primarily small cap, so they're not as predicated on international cash flows as some of their bigger brethren. Moving on here, let's look at some of the commodity stuff. Again, if you like the commodity vol, we'll get out into all that in much more detail in a little bit, in about an hour, on the old TWIFO program this week in futures options. But crude's been rocking and rolling this week, listeners, mostly to the upside, blowing through, hitting, I think, the 74 handle out there in WTI. So all sorts of craziness abounding. As we're seeing towards the end of the week here, vol actually coming off a little bit. OIV hovering right around the 26 level, which is decently inflated given past levels, but nowhere near as low as we've seen it, in recent months when it was down in the teens. Mark, you guys do anything out there in commodity vol these days?
Not really, although I think oil is super interesting.
What is it that you find interesting, sir?
Oh, just the way it's been moving around. I mean, it's actually one of the assets that's been really volatile the last few weeks. It has not been, I mean, we've seen it. USO, which is kind of the boring version of oil, has been between 13 and 15 in the last week. That's some movement. I mean, so think about this. A week ago on the 21st, USO closed 1331 and had a low of 1314 and had a low on the 19th of 1310. It's now above 15. That is a nasty move. Now think about what that means for WTI. Right, USO is kind of like WTI on methadone, and it's pretty impressive.
WTI on methadone. That's a good analogy for USO. Speaking of USO, Mark, we have a poll out to our listeners right now. I'm gonna jump ahead of our vol voicemail for a second, and we asked our listeners this week. Crude's been on a tear. We know many of you are out there slinging options on all things crude, so we asked you quite simply, which product are you out there slinging your options on right now? How are you quenching your thirst for all things crude options? Is it WTI? Is it the aforementioned USO? Is it XLE? Or Mark, is it other? First off, what is your weapon of choice out there? And then B, what do you think our audience is playing?
XLE. I guess the XLE has got to be it, right?
And you think XLE also for the audience?
Yes.
Well, as of right now, it is still a tie between WTI and USO, both at 38%.
Wow.
XLE only 10%, and other getting 14%. I haven't got anybody answering exactly what their other is yet, but we shall see about all of that and more as we keep on rolling right on into your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. Going to hit up your questions. If you guys got questions, hit us up. You know how to find us, all the aforementioned places, the social medias, the website, the email, even the app, all sorts of ways to hit us up, including the live chat. If you're in there and want to get your question answered forthwith. Live chat seems to be holding up, so at least the chat gods are smiling upon us here today. Let's see how many we can get to here, Mr. Meatball. Let's go with this first one here. B Folk wants to know, he says, I like the suggestion of a short 30 or 60-day call 1x2 in VXX to hedge my longer-term puts. How did that strat work out this week? Something like selling a near out of the money, buying two farther out of the money in the same month may help motivate me to put some on this week. Well, Mark, so he's asking for us. This is what we were talking about last week on the show. The traditional hedge out there in the VXX land would be something like a vertical, but that gets expensive, particularly if this thing's eroding away every week. So he talked about some alternative ways to do it, including that old reverse ratio, selling one, buying two a little bit. The thing we always talk about in VIX land, can it be applied to VXX land as well? We talked about it a little bit on the show last week. So B-Folk asking for some specifics. All right, let's do it. Let's crank away a little bit here on VXX. So yeah, if we pull it up let's make it easy. Let's do something straightforward, like a simple July. Let's see. Last week VXX on Friday showtime was at about 33. So let's see. Let's make it easy. Let's go 35, 40 in July. So a nice round monthly 1x2. You're going to sell one, listeners, and buy two. So sell your 35, buy the 40. Let's see how that works out. They were at about $2 for the 35s on Friday last week, and the 40s for $1.10. So you could do that whole thing. Remember, you sell one, then you buy two, so that's $2.20 on the upside. So you actually got to pay out a debit of 20 cents to do that 1x2. So maybe that's less attractive for some of you out there who like to get your juice for free, like the rock lobster. So $2.20. Let's see. Let's do obviously the vertical you could have done for 90 cents. So obviously cheaper to do the 1x2 than the vertical, but a little bit different payoff structure. Let's pull it here again. The 35s, they got about as high of about 630 intra-week, and they closed yesterday right around 430. Let's just make our lives easier. Let's do closing numbers. The 40s got as high as about 385, and they closed around 250. So that 1x2, if you were savvy, if you were on it, if you were babysitting it, and you closed it out maybe around the high, let's see, 550, about $1.20. You could have made on that bad boy if you sat on it. Remember those? You got two on the upside, and VXX rallied pretty hard. But I think more likely, if you're like most people, you got a job or a life, and you got to maybe pay attention to it more, less often. Then probably maybe around yesterday's closes, you could have taken it off for about 50 cents. Still a winner, and you more than doubled your outlay on this bad boy. The straight vertical, if you bought it, it cost 90 cents, and looks like at those peaks it got up to about 250 or so. So you did all right. Almost 3x your money. And at Thursday's levels, you doubled your money at $1.80. So there you go. That's how it worked out for that pretty straightforward 1x2. Not bad, but requires a lot of babysitting. Would you concur, Mark?
Yes, it does.
Is this a strategy you guys utilize at all in the Carmen line landscape?
No, it isn't. I mean, I like 1x2s, but you really need a nice vol pop for that spread to work. If you have really crazy VVIX and you want to set up a bear play, a 1x2 can be not terrible.
So when you're hedging your 2,500 of your VXX 10 puts, which I don't think you're going to be hedging those, but let's just say theoretically.
I sell 5,000 of the fives, obviously. No.
Yes, there we go. But theoretically, if you were going to hedge some longer term VXX downside puts, would you go straight up vertical, or what's your? I'd
probably do it as a calendar-y type of thing, trying to kind of time how quickly VXX will decay. That's, in my opinion, kind of the smarter way to do that.
Yeah, a similar approach. Instead of going up, you go out. That, of course, also requires a little bit of babysitting there.
Yes,
as well.
Yes.
None of these, I think the moral story is none of these are things you can kind of set and forget. You're going to wake up like I did this trip, actually, Mark. I was traveling around this week. I'm on vacation ostensibly, even though I'm talking to you all the time and doing shows.
I know.
But I have so many accounts, different things that we do down here and manage. And I was at the pool the other day and I saw something I had forgotten about in one of my IRAs from months ago. Far downside VXX puts. I picked up a bunch of them. So that was my notice that things were moving. So I had to go check from the pool and see what the heck was going on. So moral of the story, don't forget about your little weird stub quotes out there in your IRA that you made months ago and then forgot about going on vacation. But it ended up working out pretty well. I can't complain about those. But that was my reminder to go babysit some of our stuff again. Not a bad reminder. You're at the pool and you got something falling in your lap. That's not bad. Let's see. So yeah, long story short, you could do it and it would work. Yes. But it's a lot of babysitting. So long as you're cool with that. And it sounds like if you're writing this question, you probably are listening to a show like this. You're probably savvy enough to do something like that. But still, interesting stuff. Fall Fox, Mark, he's got the old standby question. Haven't talked about it in a while, so maybe it's time to revisit it. He wants to know, do we prefer iron condors or iron flies? He said, I know one strategy won't work every time, but what scenario is preferred? You know how I fall, Mark. I've always been an iron fly guy. What did our old pal Don Schlesinger say? He said the iron condor is the iron fly for cowards. Do you still hold to that philosophy, sir?
Oh, I'm sorry. Repeat that. I lost it for a second.
This guy wants to know if we prefer iron condors or iron flies, and do you still hold to the philosophy that the iron condor is an iron fly for cowards?
I just think iron condors are a waste most of the time. They are not as good as people think, and there's a lot more management than people think. And they don't really do that much for you. I think people look at the P&L at expiration and think that the iron condor is so much easier to deal with than the iron butterfly. And then when push comes to shove, because you collect so much premium on that iron butterfly, it ends up being a much easier trade to deal with than an iron condor when they get in trouble.
Your old buddy Jared may have take issue with that. He was quite the condor man for a long time. Of course, he isn't. He isn't anymore.
And now what's he doing?
Yeah, he isn't anymore. So maybe that says something about it. He's not exactly as into condors. Maybe if he had called it iron fly options, that would have been iron fly options. That would have been the savvier name. I don't know. Interesting stuff out there. Nonetheless, we gotta get back on one of these days. See what he's up to in the research world.
Yeah, we should catch up.
All right, let's move on here. Got a bunch of very kind of esoteric, theme-heavy questions. Here's a fun one, Mark. Rev Tim Tom wants to know what's your favorite way to trade skew? I mean, I've always liked the old bullish risk reversal. That's where the name kind of comes from. You're reversing your skew risks. That's always been if I have to think of my go-to, what I usually do, it's something along those lines. But to each their own. Mr. Meatball, what's your favorite way to trade skew, sir?
Well, I think that the risk reversal is a great way to trade skew when it's you move kind of uniformly, or when calls get cheap and puts get expensive. Risk reversals are great, but sometimes just puts get expensive, and that's when I like using 1x2s. So, which is probably your other favorite trade for a skew trade. 1x2s are great, and they're very effective at, I think they're extremely effective at dealing with skew and curvature and on downside or upside when they get overbid.
Since we're talking collars and risk reversals and skew, we had another question here. I don't see it on here. It's gotten lost in the ether, but I do recall it. Someone asking us recently. I'll see if I can find the name. Why the heck is one a collar and one's a risk reversal? If you buy the put, and you have the stock and you sell the covered call, it's a collar. Whereas if you're just doing it the other way, it's a risk reversal. Why is that? They were very confused and took umbrage at that. Well, the risk reversal comes from what I just said before. I forgot your name, but we'll get it out to you. That, of course, you're reversing your skew risk. It's not the way people usually see it, but that's where it comes from. It comes from that people looking at their skew and saying, oh, I'm exposed on the call wing. I'm not too exposed on the put wing. Maybe I want to reverse that. So that was kind of the origins of that term, kind of lost to the downside, to the dark days for a lot of people out there. Whereas the collar, you're kind of effectively really collaring the movement of your stock, right? To the downside, you're capped in terms of the put, and to the upside, you're capped because of the covered call. So you kind of put a collar around where that stock could move. So that's where that comes from. I don't know, Mark, you have any other alternate origin stories for the term risk reversal?
Well, I had thought it had to do with just the reversing of your risk, right? So if you buy put and sell call against a stock position, that against a long stock position, that flips the risk.
That could work. There's all different thoughts to it. We always talked about it mostly around skew when I was coming up in the biz, but to each their own. That's why these terms are fun. Their origins are kind of lost to the sands of time. Let's see here. What's this one? All right, we got a kind of a weird one here from Mark from, let's see if I got all this, from G Glee. Interesting handle. He said, more about collars. Buying collars means buying skew and paying up. So does it stand that the best SPY trade is selling skew by selling 25 delta puts and buying 25 delta calls? So your old bullish risk reversal. They go on to write, maybe add a cheap hedge with a 5 or 10 delta put in case the worst comes to pass. Right now, he gives some examples. He can sell this October. I'm not sure when this call question came in, but he says he can sell the October 25 delta put, 55 cents, buy the Oct 25 delta call, 55 cents, and then buy a put for about 20 cent net outlay thought. So this is a pretty straightforward strategy, Mark, selling the put, and then, of course, coming on for the call kicker, and then if you're worried about it, effectively having the puts to the downside. I'm sorry, buying the 25 delta call and then having the put kicker on the downside. So you got the bullish risk reversal with the put kicker. He wants to know, is this the best way to trade SPY?
Well, of course, I can unilaterally say this is the absolute best way to trade the most actively traded ETF in the world. So, yeah, sure, whatever you think, bud. You know, applying a broad-stroked universal yes or no question to the S&P 500 makes tons of sense.
So the answer for you then is yes. Mark Sebastian
100%,
says yes.
Smartest thing I've ever.
Bullish.
What I want to know is if this is the best way to trade it, how come everybody doesn't just do this all the time? Everybody in the world would make a bunch of money.
So Mark Sebastian, for the record,
because it'd be the best trade.
Says bullish risk reversals with put kicker equals the best trade, the best way to trade SPY.
Yeah, quote comma. Hands down.
Hands down. No argument can ever be had against that strategy. No, that's
brilliant strategy,
that's
young man.
That's an old strategy, Mr. or Mrs. G. Lee. It's been around for a while. It can work in certain scenarios. Certainly, those puts are juicy.
If it's an interesting way of replicating along. I'm not against it.
I always have that fight with your counterpart there, the Rock Lobster, talking about bullish risk reversals. He likes selling the put. He's a little more hesitant to buy the call until the things start moving. He likes his juice for free. So this is an ongoing debate he and I have. We're between establishing a bullish risk reversal at the outset before letting it run. This one likes to establish it here. I'm okay with it.
Well, how about a bullish call spread against a short put to then take advantage of all of the vol and to get even shorter vol. So
let's just do this. Let's do a bullish call spread and then a short put spread on the downside. Then you got a bit of a funky condor. How about that?
Mm-hmm. Oh, yeah, can't lose.
Going back to the condors. They're going back to brings it all comes back to condors at the end of the day, listeners. Let us know your favorite way. We're joking here, Geely, that it could work, but it's not the set it in stone best way to trade SPY. But good luck with it. Your little trade here, 20-cent net outlay. If you like it, go for it. Let us know how it works out for you. Meanwhile, we're going to keep on rolling, listeners. It's our final segment. It is time to bust out the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. This is indeed the portion of the show where we attempt to wrestle the slippery pig that is VIX Cash. This time last week, the Meatball and I were looking at probably seeing the holiday start to creep in to the volatility, so we're going to see VIX come in. Of course, a few errant tweets from the White House scuttled those plans as we saw VIX go the other way for the lion's share of the week. Now trending in our direction, but a little bit too little, too late for our purposes. I was at 12:05. The Meatball was at 11:55.
Geez, we're both embarrassing.
So we were both way right now. Right now we're looking at 15:35. So yeah, we're 3 handles and change off. So not exactly our best showing out here. Mark, I'll be generous though. Again, I'll be nice. I'll let you go first again. We'll go ahead. What you got?
So we'll be after the 4th of July, which is in the middle of the week. I think what we were looking for is exactly what happened today minus a move to 19.
Yeah, pretty much.
I'm gonna go 12.95.
Yeah, without that pesky move to 19, we would have been.
We would look brilliant. We'd be brilliant.
I'm sorry. What'd you say? 12.95?
I'm gonna say 12.95.
12.95. All right. I already wrote my answer down here. I'm gonna go a little bit shy of that. I'm gonna say 12.55. So I bumped myself up about half a handle from last week, but still. Yeah, barring any pesky moves to 19 over the holiday weekend, or the holiday week, we should be good out here in the realm of volatility. Well, Mark, you know what? If we could find it here, you know what? It's not lurking there. Where is it? Here we go. All right, Mr. Meatball. With that, you can't hear it, but our listeners can. That music kicking in means we've come to the end of another epic journey through the world of volatility. Don't worry, listeners, we'll be back in the northern studio this time next week. So hopefully we won't have to deal with all of the thunder and the storms and the outages and the chat issues and the meatballs, ice, and everything else that we have to deal with this week. So don't worry.
Yep.
We'll be back on normal time. Probably have some guests joining us next week, too, so look forward to that. But before we go, Mr. Meatball, it's been a crazy week in the vol space. If people are intrigued by what you guys got going on, maybe VXX made easy, maybe some Carmen line, where should they go? What should they do?
So if you want a smarter way to trade long the market, reach out to me, Mark at CarmenLineCapital.com. Qualified investors only. Accredited. And then if you're interested in learning how to, you know what, people, if you haven't bought my book yet, go and buy my book, Trading Options for Edge. It's really pretty good. Mark, I know I gave you a copy. I don't know if you've gotten a chance to peruse it yet. But
I only read books where I'm quoted on the jacket, sir.
You are in the jacket. I gave you a shout out.
I'm just kidding. Yes,
Anyway.
It's excellent. It's deep. I put it by my I put it by my bedside, and whenever I need to fall asleep quickly, I bust it out, and it's just.
Well,
let's
just put it this way: if you read my book, a lot of these smarter questions that we get in vol views are kind of answered in kind of how our thought process works. So it's a really good book. I spent 2 years writing it, called Trading Options for Edge. And, you know, I'm not one of these guys that uses a ghostwriter. It's actually my stuff. So go to De Gruyter's or Walmart or Amazon and buy my book, Trading Options for Edge by Mark Sebastian.
There you go.
Let's get it up to best-selling option books this week.
Go find a bookstore
I believe in you guys.
near you. They still exist. And
they do.
You can find Trading Options for Edge by the Meatball himself, a.k.a. Mark Sebastian. Wrapping up a little bit early here this week, listeners, but don't worry if you're in the chat, if it's working for you. Hopefully the Southern studio gods still smile on us. Then we'll be back here in about 35 minutes or so to talk some commodity volatility. Crude's been rocking and rolling. We'll get into that. Maybe some ags, maybe some equities, some gold. You never know what's going to come on for TWIFO. So stay tuned for that. We'll be back in about 35 minutes. Otherwise, you're listening to the podcast. Just stay where you are because you'll get it automatically. And we'll see you next time for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.